Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today I'm talking about how Michael Burry put a tweet out about how this is not the market bottom, and he gave an indicator which is pretty much useless in my personal opinion. So I think he's kind of wrong on this one. It may not be the market bottom, but this indicator is not really going to be helpful to us.
Oh, okay, coming out hot. If you like this kind of entertaining stock market content, we're two super guys trying to figure everything out. Give us a like and subscribe, and let's get started.
Two stupid guys trade stocks.
So he's wrong, huh? He's
Yeah,
wrong.
yeah. I don't think this is a very useful way of looking at it. So, this is the tweet, right? He's like, "No, we have not hit the bottom yet. Watch for failures, then look for the bottom." All right. He's talking about the two SPAC ETFs failing. He's like, not nearly enough, which I get. Yes, when you truly see capitulation, you should see household names going out of business. All right. If Peloton still hasn't claimed bankruptcy, we're not at the bottom yet, probably. All right. Just gonna throw that out there. But the reason
Okay,
why I don't think this is
fair.
a particularly useful indicator is this is a chart. I think it was like trading economics or whatever. This is commercial bankruptcies over time. So you see, we're chilling at a very, very low level, right? Easy money, interest rates were like 2%. No one was having to claim bankruptcy. You could just borrow whatever the hell you wanted or sell stock to idiots from Wall Street bets. Yeah.
Yeah. Money loans were super cheap. A lot of houses went off because, not many times in history you can get a mortgage payment for 2% interest.
Yeah, when money is cheap, companies that don't deserve to survive are still surviving and thriving, even maybe. So if you shorten this up a little bit, you look at the timeline here. So we all remember the 2008 financial crisis, right?
No.
It's relatively within all of our trading or investing or aware of world events kind of lives.
I was 4.
Um, oh, well, no.
No, I'm just kidding. I was like 18. My bad.
So the 2010 peak for bankruptcies, there was a considerable lag here between when bankruptcies peaks. Remember that they peaked right around here, the end of 2009, beginning of 2010. Right, that's where the peak of bankruptcies is. If you actually look at the stock market here, you're looking at the bottom of the market was in the beginning of 2009. So bankruptcies are actually peaking right around here, which is like 9 months later. So it's not a particularly useful indicator of a stock market bottom. Sure, it could tell you when one was in retrospect, maybe that you've kind of confirmed, but you wouldn't even know that was a peak of bankruptcies and it wasn't continuing up until the next following quarter. So really, this is going to be a lagging indicator by a year approximately, if it were based on the 2008, 2009 financial crisis. So that's why I'm saying Michael Burry may be right in the sense that this is something you can look at, but it's not going to be useful
Yeah.
to you to determine whether or not this was a stock market bottom like 2 weeks ago.
We'll be 3
He's wrong
months
about that.
behind, basically, is what you're saying. At least.
No, like a year.
A year?
Yeah, like a year behind.
Oh, that's not a great indicator. Okay.
Yeah, it was 9 months after
Oh,
where
nine
the
months. I
actual
heard 3.
peak turned
That's
out
on
to
me.
be.
My bad.
And then there was another, you wouldn't know that was the peak until you see another quarter after that where, commercial bankruptcies have come back down. So you wouldn't even be able to confirm that was the peak until about a year later.
Yeah,
Not a very
that's
useful indicator.
not. I would rather use MACD, which I think sucks. So, yeah, that's not good.
Okay.
That's pretty bad.
Can't say I know much about MACD. This was kind of an interesting one though too. Dylan and I talked a little bit about this in the previous video because I was kind of curious on whether or not we should continue being super bearish here, or if we're going to see a little bit of a bounce. He basically thinks that this was a bounce off of one of Fibonacci levels. I don't know. We're going to pull up a chart real quick and see what that looks like in terms of where that bounce may have occurred and kind of where we have to run to room on the bounce.
Yeah. So, Fibonacci, I don't use it a lot because I feel like it's one of these, actually, this will be better if I just delete this and then I show you like how you get rid of it. Because you can kind of make yourself right, like no matter what you do. So here, I'm going to add a level right now, Fibonacci. So boom, you kind of take to the peak, go down to the bottom here to where the lines meet. So there.
Okay.
A lot of people do use it, but for instance, I need future data to draw where this is going to know if it's going to be right? Because if you look right here for the low point, this would have gone way past. So, it went up to the halfway point in the next one. Now,
Yeah.
if you stick with it later and you can see into the future, you'd be like, oh, shit, yeah, no, this worked. but then it didn't really work here. It's more of a ballpark. It did work here, came down, kind of a ballpark. I don't really like these levels. However, it is perfectly at a Fibonacci level right now. It just hit one. Granted, if you draw it the way that I draw it, going from, if you're in a downtrend, highest peak to lowest peak. So also depends on how you draw it. There's different ways to draw it.
Yeah. And every time you put in a new low, you're creating like a whole new distortion of your Fibonacci lines.
It changes everything. Yeah. So if we set a new low, everything is going to change.
Yeah. I mean, but it does tell me that there probably isn't a tremendous leg up still left here, right? Like the most we've seen above this, if you're going by this as like an indicator, is like a kind of a retracement to like the middle of the next Fibonacci level, which is what, like 415 or so in terms of S&P 500, 415, 420.
408.
Kind of like the
408. It is a little alarming that we didn't set a new low. Alarming for me because I'm very short, right? Because we, hit a low, then we didn't. It went up a lot. Low. It went up a lot. I would have liked this to have come down to 365 or before this happened. It didn't. So we'll have to see what happens. But you got more important levels and more important volume action, such as this is coming up on low volume. I think that's much more important. And your 200 moving A is still chilling at 426. So
yeah. All right. I'm going to go back to the presentation real quick. Two other kind of important highlights here. He did actually tweet about talking about how inflation is typically spiky. And he's like, no one's going to take credit for it when it goes up, but they'll be, perfectly content to jump all over it and take credit for it when it's going down. Of course, that's just how politics work.
I agree with that.
Yeah. If something's going positively, it's a result of your efforts. If it's not going well, you have to, blame your predecessor probably.
Such a scam.
Yeah. Yeah, it's funny. So the big kind of data point for the inflation coming out this week is we got CPI. The August number will be released this week, September 13th, before market open. So it's gonna be a pretty wild morning. It always makes for an interesting day.
CPI is September 13th.
Yeah, this week.
Oh boy! All right.
Yeah, I know.
Well, hopefully it's like 20% for my sake.
I doubt it will be. And then following that, once we have that CPI data, the week after that, we're going to get the FOMC meeting for the month of September. This is the remaining meetings for the rest of this year. I think right now the market is calling for about 0.75% hike on the Fed funds rate at this upcoming meeting. So we'll see what actually happens. But
he said there's going to be pain, so I would expect 3/4 hike. I think that sounds fair.
I think that's very likely as well. I don't see them diverging from that unless CPI came in 12% or 5%. If it's anywhere in the reasonable realm of kind of uncertainty, it'll still be that 0.75.
It'll be like 7 to 9 or something, and then 0.75. All right, dudes. Let us know what you think of Burry's thing here, and if you believe Vinny or Burry. Ooh, fun.
Yeah. See you in the next one.